So what exactly is my strategy? When do I place a trade and when do I exit a trade? What are all these lines in my charts and what exactly is going on? If you have watched some of my reels on Instagram or my live streams here on YouTube, you would have known that I am trading a really simple but not that easy trendline strategy with some support and resistance. The trend lines are the meat of the strategy, and the support and resistance, we could say that they are the side dish. So let's dive into the charts, and I'm going to show you like the general idea of the strategy. So I will try this video to be as raw as possible with no big cuts. So just like, I don't know, grab a coffee and let's sit down and do this together. So right now we are looking at gold in the 4-hour time frame, and you can see that there are plenty of lines on the charts. I know that they can be like a little bit confusing, but let me just delete everything and take it from the start. So first things first, the thing that I do is I grab the horizontal line tool from TradingView and I try to place some support and resistance. So keep in mind that support and resistance are the side dish of the strategy, so they're not really that important. I have them there to use them as confirmation when I enter a trade. So I'm going to really generally place the support and resistance lines that I see on the charts. So right here we can see that price resisted this point. It has resisted this point again, and once it broke through, it used this line as support. 1 touch point, 2 touch point, 3 touch points. So this is definitely an area of support and resistance. Practically my charts have 3 to almost 5 lines of support and resistance. Right now I'm just going to keep it simple and have these two, since I cannot really identify some other clear lines of support and resistance. The next thing I do is I create trend lines. So first of all, we will create some downward trend lines that practically keep the price down. I find the highest point on the chart, and from there I draw a trend line that moves all the way down to the second touch point that I can see. So we have this downward trend line, and if we want to track price even steeper, we can create another trend line. This is our point A, and this is our point B, the latest point that we can possibly find on the charts. And these trend lines are keeping, again, the price down. Next thing we do is we can create some upward lines that are practically keeping our price up. And I will paint them in green color so we can easily identify them. So practically we can see that price is being squeezed between this upward green trend line and this downward green trend line. When price breaks one of these trend lines, for example, let's say it breaks this red trend line, I will engage in a long position. I will engage in a long position and I will put my stop loss on the other side of this green trend line. Now, as time and price continues, my stop loss is going to move even further up, and at some point it is going to be in profit. So this is the general idea, but let me just jump into an example of a real trade that I placed. I will take you a few days back when my green trend line was exactly right here and we couldn't really see all these points right here, let's say. So we have this green trend line right here that has multiple touch points. We can see all the way back right here, it has some touch points, and here we have 1, 2, 3, and with those touch points right here, we can say that it has 4 or 5. Now this is great because the more touch points a trend line has, the more significant it is, the more power it holds on the chart. I am really attracted, let's say, to this trend line. The downward trend line would have been exactly right here. As soon as price broke out of this green trend line, and I was convinced that price broke out of this green trend line, I engaged in a short position right here, and my stop loss was on the other side of the red trend line. So as you can see, it goes perfectly downwards. And what I would have done, I practically closed, so let me just say that I practically closed this trade somewhere right here. Because of FOMO, I didn't hold this trade for as long as I should have held it. But what I should have done on this scenario, because we can see that price of gold is practically going just down, and I want to capitalize on this trend as much as possible, I would have drawn another red trend line that is even steeper. So I have drawn this red trend line that is even steeper, and practically I would have my stop loss on the other side of this trend line. So as soon as this the red trend line got crossed, my trade would have closed, and practically I would have capitalized on this big chunk. So this was the general concept behind my strategy. I hope it didn't really confuse you with all that talking, but if I did, please let me know in the comments below. Don't forget to like, comment, subscribe, and share this strategy if you find it helpful or not. Thank you so much for watching, and I will see you in the next live stream or video. See you soon.